Hey, good afternoon, guys. So, there's a couple of things. Earlier on this morning, myself and Paul done quite a long stream, which will actually be shared with the public in probably the next couple of days. But we've actually gone and done it in and around the prop firm channel that we have. So, that was the first thing. The second thing is, in terms of Bitcoin, look, right, I think there's definitely some. So, what I mean by that is, I'm going to go back a fair amount of time, right? So here's a couple of things I shared last night in the visitor section. So the first things first, I talked about this back in October, right? This particular level, you can see 25th of October, right? This little orange line, heavy liquidity to the downside. And what I talked about, put a bit of emphasis on this, right? This was literally the day after explaining the fake run out on liquidity, right? So these moves were only part of a bigger sequence, right? Now, obviously, part of the moves that I talked about with the lessons and part of the streams that I was given kind of at the time, right? This was actually the fake run on liquidity, right? So this isn't just a random number. This isn't just a pluck this out of the air. This is understanding what is actually sitting there, right? So I've talked about this way in advance, and when I say way in advance, I'm talking about a year or more, right? I've talked about this. You can come through my TradingView streams. Obviously, I can't edit or change these, right? These streams on TradingView. Come back through some of these, this market overview. Search this in my profile, right? There's the link there, right? I talked about this back, I think it was around April time, the end of April. I talked about the volume profile, right? What I'd like to see, how I'd like to see this, right? And this is actually part of the stream, right? What I then discussed was the 28th of April. That price dropped down, which was this year, right? Basically coming back to a value area, right? The value area is sitting there, right? Well, surprise, surprise, what did we do? We come back to the value area, we start moving on up, right? And this is why I say nothing's changed. Because there's no surprise. Nothing has gone, this has made me think that we're off to the moon. The reality is, these particular moves are doing no different to what we'd anticipated, right? And I'm going to go even further. Look at this one, right? This goes back even further, right? This is back in the end of last year, right? Look at where we were, right? See this little blue circle? Right? This for me is a larger scale accumulation. What do you expect from the blue circle? The price to go up, right? That price rallying on up has done nothing that you wouldn't expect. Right? It's rallied up. As far as I'm concerned, right? Even this was published in the book in May, right? We had a 2 month window where we had to sign off before the print release for this book, right? And we had the 2 months where we'd already put the analysis into the sequence. I'm talking about this in terms of where we are. Right? We're now entering an accumulation on a very long time frame. Right? This is published in the book. At the time, I'm talking about having the SC, the move down, having the AR, the ST was the low, right? And the move up. What do you expect the move up to do? Well, go up, of course. Right? Now, all of these things combined, when I've talked about these levels, this level being hit, this level being moved, right? This isn't anything kind of untoward, right? This is obvious, right? And I've covered this time and time and time again, right? You can come into the community, come to live streams. A lot of my most recent streams are down in the off-topic section because some of these are just not, these are not an analysis that are live. I'm not trading live on some of these streams. I'm just giving some kind of education, right, with a real world example. Okay. Now, I've talked about things like why I don't think Larry Fink is going to become Santa this year. I've even joked about this, right? BlackRock are not a charity. BlackRock are not going to hold you a red bags, right? They're not there to make retail traders rich. Right? We've seen all of these kinds of things in terms of the ETF that was launched, and I've shared posts, I've shared various aspects of this, right? Now, if I scroll down through some, let me just find one of the ones I'm thinking of. I've done a post recently on BlackRock, right? This particular BlackRock post, I shared the first ETF. This is US based ETF linked to Bitcoin. back October the 30th, 2021. So we have this ETF launched, we kind of fake pump out, and we sit down doing practically nothing for 2 years. What makes anyone think and assume that BlackRock coming in are going to hold your red bags and create millions of retail traders, or millions for retail traders, per retail trader if you listen to some people? What makes you think this is going to happen as simple as that? It just isn't. And that's just being logical with a bit of common sense. I've asked in my streams for anybody to come with a logical argument that can be supported with evidence rather than saying things like, oh, the halving is next year. Oh, BlackRock's going to throw some money at the ETF. These are the things that are going to pump Bitcoin. Guys, it's never as simple as that, right? And the more institutional an instrument becomes, technically, the harder it becomes to make money out of, right? If you go to BlackRock's own website and just search ETFs, they'll talk about various things. They talk about 1,400 ETFs across the whole marketplace. They'll talk about the stabilization that an ETF brings. It's not adding volatility, and it's just definitely not going to pump the price in the way that majority of these, retail traders are actually looking for. So what I'm saying is, if you see where we are, and I've explained this in massive detail, time and time and time again, I've put this in terms of this larger scale accumulation. Right? We also have things like asset managers, here's the crypto COT. We also have the asset managers, Ethereum, this is the here. So the overall bias is long, grand scheme of things, but it doesn't mean that we go directly from 37k up all the way to 100k today, right? And it doesn't mean that we're going to see that by Christmas. The market just doesn't work like that. So all I'm trying to do is to give you a little bit of an insight as to some of these key levels, how these key levels work, why they work, why they do what they do. And I've talked about this in, so many of my posts. But I think the point being, right, is what I've tried to educate you on, what I've tried to show is just to get out of the mentality that the price only goes up. Right? The price can only do one thing because someone on Twitter said so. I've talked about how the correlation in the market, what kind of, honestly, I've gone through every single aspect. I'm just trying to find something in a post that would make maybe a little bit more sense. Right? So I'm trying to find, where's the post with the economy? Let's try this one to start with. I might have something in here on this. Yeah, this one is all right. So in this particular post, and I guess if you followed me, you're going to know this anyway. I've talked about these various moves all the way through from start to finish. I've said things like 37k right now, 35k right now, whatever, 36 as we are at the moment. This is still 50% of the current all-time high. So just don't get so excited. Don't be so trigger happy in terms of a move that's gone up. If you think this is impulsive and bullish right now, we're all in trouble. This is the market in trouble as a whole. It's definitely not any form of bullish right now. I've talked about these moves over and over and over and over again, trying to drum it in to anybody that wants to listen, anybody that wants to learn. Try to drum this in enough to show, one, you can see what is happening. Two, you can also see what majority of retail wants to happen. Keep in mind, institutional players, they win 99% of the time. Retail traders tend to lose at least 90% of the time. You're going to be following the wrong person if you're on the wrong side of the money. I've explained this, like I said, time and time and time again. You can come through all these individual posts, especially all the ones on TradingView. You can't change or edit any of these. Why I was calling long at the bottom, what I saw with the reaccumulation midway through, why this would lead to a drop at the highs, down for a 28k low, why I didn't like the 28k move was already in there. I'd explained that on the move back up, why we would come back down before going back up. We'd see 65k again. 65k will attract all the buyers, and we can drop to 40k again. No surprise there. We then ultimately come on down. We go into the redistribution phase after calling these moves. Have the redistribution, called this at the start of the redistribution. We rally on up, we fall through. Right? All of these things are just emphasizing where we are in a larger picture. And the larger picture is what I've shared, what I've published, what I've actually published in a physical book back in May, that at the moment, the move that we're currently seeing is your ST move up to the first sign of strength. We want to see some kind of sideways action. I keep saying it doesn't have to be deep, right? We don't need the STB to go lower than the ST. We don't need the spring to go lower than the ST. All we want to see potentially is a schematic 2. A schematic 2 would actually be more beneficial for the market right now as a whole. Okay, so where we are, I feel, is we kind of sat probably just above this range or in this range, and we've done nothing different to what I've actually posted, published, said for nearly a year. And that's the reason why I say no change. Okay, so I'm just going to check to see if there's any questions. Obviously, if you haven't seen the last couple of streams, you just come back through the trading view links and so on. If you come in either to my profile or obviously into the community live streams, scroll on down to off topic, and I got several streams recently on various topics, from obviously Forex, Bitcoin, etc., etc. There's one or two Bitcoin ones which, you know, really go into a little bit more depth in terms of the tactics and the strategy, why we're not quite ready, etc., etc. But I've covered this in depth, guys. So again, I'm just going to reiterate, at the moment, there is no change in the market conditions, no change in the market sentiment. There's nothing to indicate that we're off to 250K, but there's also nothing to indicate that we're currently going to drop down to 12K. Okay, so the range is set. The conditions are already mapped out. It hasn't changed since I actually posted this, and therefore no change. Simple as that. All right. So let's see, any questions? Yeah, I mean, the halving, you know, for me, it's one of those ones. Of course, it's going to appreciate the value in the long run, right? I don't think it's something that you're gonna see a rapid move. It's like the day of the halving, you know, we double in price. It just doesn't work like that. And I think regardless of what any influencer or any other analyst wants to tell you, I think for me, a lot of people, they tend to look at log charts for one, right? And, you know, I'll just give you an example, a great example in terms of a log chart. We stick a weekly chart on, right? We come from a weekly on Bitcoin. Let's go to a weekly on gold. So let's go even further. Let's go monthly on gold, because there's a lot more data backtracking, right? If I put a log scale on gold, you know, this log scale move on gold is even more impressive than the log scale you're going to see on Bitcoin. Look, it only goes up. Oh, it's only up. It's up, up, and up, up, up. Keeps going up. The reality is, when you're seeing rainbow charts and you're seeing stock to flow models and all this shit, the reality is the market is doing what the market needs to do. And the market will obtain its liquidity up and down. Retail traders come in and think within, you know, watching a YouTube video or sticking an RSI on the chart, all of a sudden they can master the market. And truth of the matter is, Composite Man, the large institutional players, they're playing a game right now with an instrument that hasn't been regulated. So we're going to see some chop, we're going to see some change. But in essence, the biggest thing for me, let me just share this last thing with you. The biggest thing for me is if you come into the leverage funds, right? And you can come in and see what leverage funds are. Just type into Google, type into ChatGPT. You can actually go and see what the definition of a leveraged fund is, right? I'm not going to go into that level of detail here. But if the leveraged funds right now are currently increasing their shorts, shorts are red, longs are green, right? The way that I'm reading this at the moment is we've actually got leverage longs accumulating under the radar, steady accumulation, right? There's no major spikes, there's no major drops, it's a steady accumulation. However, at the moment, we have a steady rising increase in the shorts. That there is showing retail traders are the current buyers, clearly with the Twitter sentiment, and the larger players are actually selling off to retail. Why do you think this doesn't feel impulsive at the moment? Why do you think it's taken a year to come down, a year to come back up, but we're only 50% back up? Does anything logically speak right? In that sense of that being impulsive, bullish nature. What is the market trying to tell us? What is the market trying to say? There's the obvious answer. Let's look at the next question. So, no, I mean, again, I said this right at the start in terms of do I see it going to 11K? You give me the reason as to why. Why 11K? Where most retail get this wrong is ultimately most people assume that the larger players want the best price. Right? The larger players want this to be an absolute bottom. It doesn't work like that. The larger players, when I posted the post about the reaccumulation, and what I'll do is I'll find it and I'll post this in here, right? So kind of come back to the stream in a 5 minutes or so. In regards to how the bigger players will work, they have to spend time due to the sheer amount of money that they have. So the longer the time period that goes on, the more chance of a larger accumulation. Now, what you tend to find is within that accumulation range, so I'm going back to what I said in terms of the accumulation, going back right away back in terms of what I posted and published in the book. If you draw a line through the center of your accumulation cycle, this technically becomes the kind of the fair value, right? This is the area, and I don't mean a fair value gap. I'm saying this is the fair value. This is the perceived ideal value for the price of an instrument or an asset. Let me turn this log off because I'll drive myself crazy later. So, in essence, right, if you've got a value that composite man is wanting to pay for something, you can draw your lines and obtain that fair value gap, right? You've got me saying fair value gap now. You can see the fair value, right? You can see the perceived value that the price is drawn to. When I talked about the reaccumulation stages back over here, this zone give us a 36K fair value. This was the perceived value. The price was magnetic to this. And again, I'll put this post, right, in a couple of minutes. I'll put this post here, and then you just click play, and you'll see it and see it and see it and see it again. Okay. When you see the price being pulled towards that fair value, where are we now? We're 3 years down the line, and the 3 years down the line, we're currently in a situation where we see in 36K. So for me, the average level, the average line is that clear 36K. So in essence, anything below, you got a good chance that the bigger players are actually accumulating. Anything above, these guys are selling. Now, I've just proven that point in terms of the selling. We've just gone above 36K. And what did we see? Well, an increase in shorts. That's how logical this is. Okay. So when you turn around and say, do we expect to see 12K? I can't find a scenario or a reason that we have to go to 11K, 12K. Okay. Now, there's nothing saying that we can't and we won't. I'm just saying there's no logical reason for. If 36K is a value area or sub 36K is a value area, that could range anywhere from 15 to where we've been all the way to 36. And that gives the bigger players an opportunity to acquire new positions from people that probably bought at 30, right, recently, or going back even 2 years where people were buying at 65 with advice from their influencers. The reality is a lot of these people are holding these bags. It'll be twitchy times, it'll be nervous times. Inflation's obviously increasing and increasing and increasing. A lot of people are feeling the squeeze. So for me, the longer that this goes on kind of sideways, the better it is for the bigger picture. If we go up from here and we only go up from here, then I think we capped. And again, I've explained that in countless streams over the last couple of weeks. All right. It could easily go for liquidity under 15, but again, like I just explained in terms of the go into 11, there's also an element of if we go to 15, I think it'll be rapid. I think it'll be, one of these horrible little wicks where it'll spike down probably from something like 25. It'll lob off 10K very quick, catch everybody on the back foot. Everybody's going to be waiting for a 12K, 11K, 9K. And then I think ultimately we end up rallying, which, if we get something like that, it's probably a schematic one which equals a move with a split. I'm just not sure how likely that is, and I wouldn't want to put a bet in terms of the odds on that at the moment. Yeah, I mean, I think the thing is, in terms of the halving, right, is, as I said earlier, the reality is we're not just going to double in price overnight. I think the halving means that there's more scarcity in the long run. But I think in terms of the shorter term, I think once the bigger players are starting to enter, and hopefully you get, this ETF approved and so on and so on. And at that particular point, it's a much longer play. We're not going to go and see, I think the halving is in April next year. I don't think we're going to get to a point where we dropped drastically before the halving, and I also feel that we're not going to rise, massively before the halving. So I think in the grand scheme of things, we'll have stabilization from someone like BlackRock coming in. We're going to spend some time under that value area as I've just gone through, and then I think ultimately, the halving kind of will come and go, and at that point, you'll have that steady increase, bigger picture, longer term. Um, yeah, I mean, there's nothing stopping it, and I think in terms of the fake out, seeing a weekly time frame, and I'm saying, well, we've got a false bar, which means we could easily go back up a little bit, but we are overbought. I'm going to come out to the monthly, and again, I've shared this on a monthly. We're practically overbought. We're not even 50% of the way, like I said, in the grand scheme of things, in terms of creating new all-time highs. And therefore, I feel we're not done yet, right? So I think the bigger picture for me is, having that move from that, as I explained there, having that move here up. There's no marking on the move up. That was the blue little dotted line that I shared as well, which was obviously the Olympic rings prior. So you'd expect the move up. We got the move up. Now it's just a question of schematic one or schematic two, and I don't really want to try to predict that. I think Bitcoin's Bitcoin. It can easily run 2 grand more than it should. I think in the grand scheme of things, the sentiment is we just early stage accumulation. Keep an eye on the character. Let's assess the character kind of as it grows and as it evolves, and then we're going to know a little bit more. So, all right. So I think that's pretty much it. Any other questions, guys? No, thank you very much for the compliment. Um, yeah, so that's pretty much it, guys. Anything else, just let me know. And if not, obviously watch the prop firm stream that myself and Paul put together this morning. That'll be live, like I said, in the next couple of days. I actually did this one. If you don't know what I'm talking about in terms of prop firms, I actually put a prop firm video together. That was in the education section. So come to the education section and you'll see this video. And I've actually gone and talked about prop firms, what prop firms are, how to take a little account from $100 worth of buy-in, a challenge, all the way to getting funded to $1 million or beyond if you want. So yeah, so we've put a bit of emphasis on that. I think Bitcoin for me is still pretty flat, and therefore, grand scheme of things, we've been playing around with the forex markets and kind of going back to roots per se. So that's where we are at the moment. All right. Okay. Thank you, guys. Enjoy the rest of the day and keep safe. See you on the next stream. Cheers all.